what LayerZero has done here and Zero as a protocol, that is a transformational technology.
I'm imagining that there was somebody in a similar seat as me at the time when Edison showed up with the ticker tape.
This is going to revolutionize everything. It truly is a game-changing moment.
All the technology in the world doesn't matter if you don't have the adoption on the other end. As we build Zero, we've been laser focused on bringing together the absolute best partners on the planet, the groups that define the markets of today and will help shape their transition to the markets of tomorrow. As we think through the evolution of global markets and the impact of broad tokenization, we wanted to work with a group at the absolute forefront of the world's markets. They're one of the largest operators of leading derivatives exchanges and clearinghouses around the world, the parent company of the New York Stock Exchange, the world's largest stock exchange with more than $44 trillion in market capitalization. We're extremely honored to welcome our first partner, the Intercontinental Exchange. And here to talk about ICE's exploration of potential applications of Zero, please join me in welcoming to the stage VP of Strategic Initiatives at ICE, Michael Blaugrund. As we think about the future of market structure and what real large-scale tokenization actually requires, who better than the backbone for virtually every major financial institution? A partner who understands the realities at truly global scale. They custody over $100 trillion in assets and process nearly $4 quadrillion annually, providing the post-trade infrastructure that underpins equities, fixed income, and derivatives markets worldwide. To discuss their partnership with Zero in helping shape the future of digital market structure, please welcome Managing Director and CTO of the Depository Trust and Clearing Corporation, Dan Doney. So, we have the world's most critical clearing and settlement infrastructure, the parent company of the world's largest exchange. What's left? This firm executes roughly 25% of all US equities volume. Please join me in welcoming one of the largest and most influential market makers on the planet. Citadel Securities will be contributing their market structure expertise to help build global trading and execution environments, as well as making a strategic investment. Please welcome partner at Citadel Securities, Marcin, Sablik. Thank you guys for being here. Dan, I'm going to start with you, if that's all right. I remember after we showed you Zero, you were telling me how you have the most demanding smart contract framework for automation of institutional processes in the world. Specifically, that the gas consumption was way too high for data-intensive institutional operations like collateral management, and that blockchains couldn't support it yet, not without breaking the bank, maybe literally. Tell us about what went through your mind when we first walked you through Zero.
I couldn't believe it, actually. It was complete disbelief, and it was, as you know, I asked, show me, because these are outrageous claims in terms of performance. And they did, and it's real. It's truly game-changing. About 2 years ago, DTCC, for those who know the Depository Trust and Clearing Corporation, we're the central securities depository for the US financial markets. As such, we're the consensus model for US publicly traded securities. Effectively, all of the bank's systems come together, each bank with its own system, and they all agree on our books and records. We recognized in blockchain a fundamentally new way to do consensus, which was either a threat to our business model or an opportunity to completely retool. So we really leaned in on that concept. We first adopted blockchain as a core technology. As many of you know, we're launching a tokenization service to really make it possible to take our $100 trillion inventory and parties to convert them to token form to trade and conduct other activities with those tokens. We went a step farther. We suspended disbelief and said for a moment, what if we could take our core processes and represent them? That is clearing, margin, collateral management, lending, the core of institutional finance, and operate them as smart contracts. If those of you who saw the great collateral experiment saw what we did, now what the issue there is collateral institutional financial functions are highly data intensive. They require real-time data feeds just to feed into the smart contracts, which are calculating collateral. Tokens are one thing. The institutional finance requires near real-time data streams of pricing, liabilities, haircut data, et cetera. Well, to do that, first we couldn't do it the smart contracts work on public chains. The cost would be prohibitive. So we had to tool up a special app chain, and we executed it. And for those who saw the experiment, it was very successful. We then said, but there's a problem here. The best we could do was 1,000 to 2,000 transactions per second. If you included the price feeds, that took us down to somewhere on the order of about 100 transactions per second because the pricing to be near real time and the other data to be real time basically precluded, while the experiment was very successful, the cost of operations precluded this. So we set about looking for an architecture that could get us to 1 million transactions per second. And if you layer enough blockchains, it's possible to get there at enormous cost. We were starting to think through those things. That's how we got introduced to LayerZero. And then they blew my mind with what Zero can do. This fundamentally changes the paradigm for blockchain transactions. It's now possible to run data-intensive operations on-chain. This is going to revolutionize everything. It truly is a game-changing moment. We see the ability to really bring our operations, that is the core of the financial markets, on-chain, and the rest will play out from there.
Amazing. Michael, I'm going to go to you next. First time we ever met, Raz asked if you guys ever planned to move all of your infrastructure to a blockchain. Your response naturally was, there's no way you could ever do that. It's not technically possible. All you could have is like a partial state that lives on chain. What was the team's reaction after you first learned that Zero could scale and after we had our initial conversations?
I'm going to answer a slightly different question.
Feel free.
I think that moment, if we were to chart it like Dr. Kurzweil's charts, you would see something like that exponential growth in terms of message traffic that's processed by systems at NYSE and our affiliates. It's not that long ago. I mean, it's within my parents' lifetime that the exchange used to have to close on Wednesdays in order to just read all the paper that had been, sort of written earlier in the week. But today you have a very technologically advanced system that's processing often over 1 trillion messages a day, sometimes, many millions of messages per second with latencies that are measured in tens of microseconds. So it's a very, very sophisticated technological system that underpins the global markets and NYSE in particular. But I think if you looked at that chart, you would see inflection points where new technology was introduced. And I'm imagining that there was somebody in a similar seat as me at the time when Edison showed up with the ticker tape. And the consequence of adding that technology was democratization, transparency, market participation, more efficient risk transfer, and ultimately capital finding its way to more productive uses. So that may be dramatic, but I think that this has the potential to really ignite new ways that we could imagine empowering not just our current business, but new opportunities for investors and for issuers. So we're extremely excited to work with LayerZero as a design partner.
Amazing. It's funny, Raz and I still joke about that conversation because one thing he does when we have conversations together is he always watches everyone's faces. He's very observant. And as you were sort of describing, not possible right now, you couldn't really do it. He just had like a smile growing on his face. And then as we started walking through the architecture and everything, there was like a smile growing on you. It was just like, You
clearly set me up. It was a trap, but I forgive you.
Marcin, when it came to, wanting to talk about building the most trading, the most efficient trading infrastructure and like what that looks like. There's only one team in the world that we wanted to talk to, and obviously it was you guys, Citadel Securities, right? So your firm has more than 2 decades of experience and the smartest people in the world perfecting market execution every single day. What are the key differences between traditional finance and crypto markets, and what's missing?
So first of all, thank you very much for having us all here today. But the first thing in between traditional and crypto markets as a whole, they're trying to facilitate transactions just in general, right? They serve a very similar purpose as a whole. I think the key difference right now as it exists is to some degree institutional adoption, and even more so the actual institutional grade infrastructure. So I'm tying it a little bit to the stories here of, well, what do you need for that? You need performance, which LayerZero clearly provides. You need robustness, which right now within the environment is harder to find as a whole. And so when we think about this environment, it's really about what partners you find to be able to execute on this. And honestly, with the DTCC and you've kind of found pretty strong partners in getting this off the ground.
I'm going to ask you one more. I'm going to go back to you. We have it in reverse order. We'll come back this way. As a look to bring the economy on-chain, you guys are here to make markets more efficient. What should we be thinking about as we try to create a sophisticated trading zone? What's the first piece of hard-won advice you would have for us as the king of this off-chain?
Look, when I think about that, I'll go and kind of go to the same topic. I run the client platform as well in Citadel Securities. And one of the things that I've learned in that entire experience is you can go to institutions once, and you can get them once, but if you fail, it's kind of a do or die situation. And so reliability, again, robustness, performance, and meeting what that client actually needs in terms of their like operating structure is essential. They don't want to deal with the complexities of what a system provides. And right now, again, if they're looking to be on-chain, it'll be difficult because the performance isn't there. If they're going to go to a centralized exchange, what are they exchanging? And so when I think about what LayerZero has done here and Zero as a protocol and what we've actually seen from you guys in technical demonstrations, that is a transformational technology. So its adoption and its ability to bring these transactions on chain, like that, I mean, if you do it reliably and robustly, people will come.
Didn't realize it was so high stake. You only get a chance to go to, was that what it was like, Dan, when you said fire up the demo? One chance and that's it. Not many people have ever tried to solve a $100 trillion problem by tokenizing and settling effectively the majority of the assets in the United States onto a blockchain, right? What's been the hardest problem that might not have been obvious that you've had to try to solve? Or maybe better yet, what are you trying to solve for in this transition? What are you still looking for?
Well, scale was the hardest problem. I think that's now behind us. The next hardest problem is privacy and compliance. I'm going to throw those together. They're related problems. Compliance, as it turns out, is a data problem. And again, if you can get the data to make the decisions and you can keep it private, then you can actually automate the transactions that satisfies regulators and their need to protect investors, but still allows the open access and freedom that blockchain affords. So that's the next big challenge, and we have a bunch of components that we're excited to roll out now that we have the ability to scale those solutions. Privacy is another component, and so this will be a piece that we'll tackle. Zero knowledge proof certainly has a component to say in the privacy mix, but there's more. So that's another component we're eager to work with industry partners and with technologists like LayerZero to solve that problem.
All right, Michael, you're back up. You spent a lot of time talking about 24/7, 365 markets, which is something I love because it just like resonates amazingly. From an operational standpoint, maybe from a business or trading experience side rather than technical, what will be the biggest shift for ICE?
Well, I think there's sort of, well, there are multiple dimensions to that problem. When you think about Intercontinental Exchange, we have 6 global clearinghouses that today operate largely on local calendars, local hours, local fiat, sort of local conventions. But you have global trading firms that are trying to operate their businesses in many cases, 24/7 styles as the trading of assets continues to sort of become around the clock. So for us, modernizing the treasury and operational processes, is somewhat independent from expanding into tokenized collateral. But for us, it's going to be kind of two sides of the same coin. And so moving both the technology and the regulatory and the risk management capabilities to support 24/7 collateral mobility in support of 24/7 trading is definitely crucial. We've recently announced a plan to introduce a tokenized equity versus stablecoin venue for US equities. That will be a 24/7 operation. That's going to also support fractional shares. It'll support instant settlement. And so there are a range of different operational challenges there. A lot of it is bringing along traditional finance and finding ways to work with both market participants and other stakeholders like regulators to ensure that things can be familiar and you can preserve the right protections at the same time taking advantage of the new technology and the shift in sort of investor preferences to be able to have a anytime, sort of anywhere experience, which I think is just table stakes now for a generation of investors that have grown up in crypto. So there's not one sort of neat thing. It's a very sort of complicated mosaic that we have to solve. Finding the right technology solutions to enable those types of sort of transformative steps is really important to us. And so we're very interested in kind of supporting a range of use cases across all of our businesses, some of which will be very high performance, some of which may have different considerations. But announcements like today really change the landscape of what could be possible.
I want a question, so I'm a little bit off script here now, but hopefully that's okay. Marcin, 24/7 markets has got to be attractive, I imagine, to a firm like Citadel, rather than being only to trade in a short window. Like, what does that mean? Is there just pure excitement over there? What does it look like?
So, yeah. So I would say, yes, excitement in terms of the availability for everybody to trade, right? That is a foundational principle for all markets. And I think crypto has shown that 24/7 is an essential characteristic of the market. To be honest, I just feel operational pain for 24/7. I like sleep. It doesn't quite exist anymore. So thank you, crypto. But no, like in all seriousness, it is essential to be able to have access and liquidity for all assets at any point in time. I think this world has evolved to that stage. It is necessary for the future. And the traditional financial markets are following kind of in the footsteps of what crypto has put forward, going 24/5 and 24/7 soon, following what crypto has set out. But yeah, if you ask me honestly, what has it meant? Operational pain.
Dan, listen, everybody tells me dealing with big institutions is slow, cycles goes forever, they don't move, they don't do anything. One of the things I've been most impressed about the DTCC and the entire team has been, you guys really had like both a clear vision, which is not always the case for many institutions, of what you want and are trying to do, you know exactly what you're trying to do, a sense of urgency and like momentum. And those things are just like not normal. Just talk like a little bit about that, how you guys think about it internally. Again, I think most people think institutions are thinking, 10, maybe this stuff will matter 10 years out from now, but it seems like it's really like top of mind internally.
Well, that's an imperative that's driven by a disruptive technology. So when a technology can disrupt your business and your board, there's two responses. Try and bury it or embrace it. And fortunately, we have the leadership that's really looked to lean in and embrace the opportunity. Now, we are a risk organization. At our very core, a trust organization, which means we deal with risk. It's a central theme. Our entire governance structure, our design, again, we are owned by we're a common infrastructure for the financial markets. We're regulated such that every decision must have an accountable party. Every engineering decision. Trust me, that's hard when you're trying to move fast to have that kind of accountability. We must. We think in many ways this is sort of a gift to the blockchain markets, bringing that kind of discipline with a speed imperative to the blockchain markets to make sure that we don't have, as they said, the FTXs of the world and the kinds of things. For blockchain to be broadly adapted by all parties at the mom and pop level, they can't be smart contract auditors. They can't know the difference between every blockchain that may come out or every technology that comes out. Someone has to represent their interests, at the same time press towards progress. And we're striking that balance. It's not easy internally as we really move forward. The good news is in doing so, we can run into tech partners who can really help accelerate that path. And there are many, certainly LayerZero is one, and we're delighted to be part of this announcement.
Amazing. 1.5 minutes left. Michael, as you guys, so again, one of the first conversations, you already had, before we ever spoke for the first time, there's been in-flight work at ICE, right? You guys have been thinking about this for a long time. You've seen how markets are evolving. Talk me through how the organization thinks about it. You obviously have also a very clear vision in terms of the technology and at least how you are looking to the future of where it may be impactful on the business. We'd love to just hear broad level.
So, similarly, we have leaders that have real conviction that the future is going to be different than today. And we're lucky enough to have a CEO, founder, and Jeff Sprecher, who has a proven ability to see around corners. And this is one that he has complete conviction, and we as an organization do as well. I could recount the sort of history of things we've done in the space, but I think we really needed the sort of recent shift in regulatory posture, in the tailwinds from the administration, in the maturity of the technology to reach a point where we can really think about replatforming the entirety of the business. And, unlike a futurist, I can't tell you, what date we should expect certain things to happen, but I think it's very probable that we're going to live in a world where an organization like NYSE or like Intercontinental Exchange is going to have primary on-chain infrastructure for the majority of its business. And so I think it's critical that all of us in the industry today are sort of learning those fundamentals, putting them into practice, and beginning to develop the muscle memory so that we can continue to offer investors and issuers the world's leading capital markets.
Listen, we're incredibly fortunate to have the three of you here today, incredibly fortunate to have a group couldn't assemble a better group to spend the time with and have as partners. So thank the three of you for coming today. Thank you so much for being here. Congrats.